The other positive theme, of course, was the economic data. We saw the ADP report showing private sector job losses moderating, but always important to qualify this, the job losses were more than economists expected. Back to the EIA inventories. Let's talk about the headline figure, crude oil, because inventories at Cushing, Oklahoma, this is a very critical pricing point because it is the delivery point for NYMEX oil futures contract. Well, they increased by 1.2 million barrels, and that took inventories overall to a 4.5-month high. It seems to be interesting that we've still got this contango effect taking place, where if you don't know what it is where oil prices for the future month delivery are higher than the nearby. So that's really acting as a catalyst, drawing in barrels into storage. So that's what's going on there. It would be interesting to see if this theme does develop, and of course these inventory numbers continue to tell us that demand is still staying quite weak overall, especially for gasoline, although we did see a bit of an uptick in distillates, which I guess is encouraging.
Okay, sure, stay right there. Let's bring in Jonathan Kornfeld, Energy Director, Asia at Hudson Capital Energy, joining us here at our Asia headquarters. I guess we got the inventory stuff out of the way. It's going to be down to the jobs numbers Friday, right?
Sure, that's going to have a lot to do with it. But Sri really got it right. The inventories were the big surprise yesterday. And if you look beneath the numbers, there's a couple interesting stories under there. The Cushing story is the big one, because that is really what's causing Brent to go one way and WTI to kind of lag behind at the same time. Also, distillates, it was the heating oil that really pulled the market higher. Now, distillate inventories are at multi-decade highs right now. So you get 1 week where you have a little bit of a pickup in demand for distillate, a little bit of a draw in the inventories, and all of a sudden investors are saying, let's pull the heating oil higher. Yeah. Now,
is that really, if I can just butt in there, Jonathan, is that really a function of the refining economics? Because it seems to me that the crack spread for gasoline is more favorable than heating oil and distillates more broadly. So there's more gasoline production.
Sure, looking at the numbers today, the gasoline crack is higher than the heating oil crack, but if you look at over the last couple of weeks, the gasoline crack was higher, the heating oil crack was lower. They've actually come in a little bit. Gas has gone lower, heat has gone higher. Yeah. So this uptick in demand in distillates, as well as the slight drawdown in heating oil inventories, will be eclipsed, because you're going to see the refiners jump on that increased heating oil crack. They're going to produce more heating oil. That's going to increase the inventories beyond the multi-decade highs that we're seeing right now, and it's going to overwhelm any sort of demand increce that we've seen in distillates.
All right, Jonathan, you were talking about Brent and also WTI. Let's hit the chart, shall we? We've got Daryl Guppy over the other side of the room. What do you want to chart?
Yeah, I had a specific question, actually. I think maybe about 2 weeks ago, the Brent and WTI maybe looked a little bit overbought on a technical perspective. And then last week, we had a big drop-off in the price of Brent and WTI. The market rebounded, came all the way back up again. What did that do to technicals? Did it make the Brent picture a lot stronger, Brent specifically, actually?
It makes it a beautiful chart. Look at this rounding bottom here, and then this handle pattern that's developed. What we normally do with this situation is we measure the depth of the saucer, take this and project it upwards from the breakout from the handle itself, so that gives us an upside target sitting at around 90.91. Beautiful pattern.
91. Okay, interesting. What about West Texas Intermediate, WTI?
We're looking at WTI. It's a little bit of a similar pattern. We have this same saucer pattern. The handle is less pronounced, but we still use exactly the same techniques. We measure the depth of this, project it upwards, and it gives us an upside target of around 115, thereabouts, from this breakout here. Sorry, a little bit lower than that, around 113.
Interesting stuff. Okay, listen, Daryl, we're not done yet. Let's get on to broaden it out. Wouldn't you know it? I was just... Sri and I were just talking, like, where's Chan? Chan hasn't emailed today, but, well, here we go. Chan has emailed. Could you please chart, surprise, surprise, gold? What wave are we in? Is it overbought? Due for a correction? What's going on? Daryl?
Well, it's more like they play waiting for Godot, as it were. It's going to make 1,000 eventually, but how long is it going to take? The key factor is this resistance level. It's psychological at 1,000. The longer-term uptrend is in place. We are looking for a retest around 920, 930. A rebound from that will re-threaten the 1,000 resistance level. A break above 1,000 resistance gives us an initial upside target of 1,200.
All right, Alistair McNeil wants you to chart silver.
Silver's a different type of situation. See how we've failed to consistently break above this $15 resistance level. So we're in this trading band. Now, we take the measure of this trading band, project it upwards. It gives us an upside target of around 1850. So the breakout must be able to continue to that level.
All right, and Cecil Patel and I were talking about NOL, and we were promising viewers we would chart it, and we keep our promises. And just coincidentally, a gentleman named Krish from Muscat in Oman wants you to chart just that NOL.
NOL. NOL has this established uptrend. Now, the key factor in the current market is that we are doing two things. First of all, buying these rebounds from the trend lines. That's number one. The second thing we're doing is we're buying a breakout from what's called a Davis box. So when we see this higher high here, it gives us a strong indication that this trend is likely to continue upwards. Upside targets based on resistance around $2.30, $2.35.
All right, boy, are we cosmopolitan today, or what? Konkoro from Jakarta wants you to chart Norfolk Southern, listed on the NYSE. What's a good entry price?
Good entry price is a bit difficult in the sense that you have this strong support resistance level through here. A break above this resistance level at around the 45, 47 mark is relatively strong, gives you an upside target sitting at around the 60 level. So we want to see a break above that resistance level before it becomes a buying opportunity.
All right, Dale, got a lot more emails to get through. We'll get back to you in just a bit. And still time to get your request in. He'll chart just about anything you want. Stocks, indices, commodities, currencies. He will do it all. Squawk@cnbcasia.com is the address. We need to say thank you. Also, goodbye to John Kornfeld from Hudson Capital Energy. We're coming right back. Don't go away.
721, left intercept the final bearing 222. 130.